Right, so Chencharu Close. Is it ulu and should you even consider it as an investment potential? Wanna find out more? You've got to watch this. Alright, so hi everyone, this is Mr. Joshua Tan and today I share with you more about Chencharu Close. Now Chencharu Close sits at the Khatib area. Okay, we take a look at the map. It is right nearby the home team NS at Khatib. We have nearby a neighborhood park, 2 schools there, Naval Base Secondary and Pei Ying Primary. And we also have other HDBs as you can see. So turning on the master plan, you can see there's one more educational plot that is actually gonna be on the left of Chencharu Green. Okay, with this you can see that the government is stepping up their plans to really build some residential over here. Where's Chencharu Close, the GLS land that was sold, is over here. The one that is a gross plot ratio of 3.2. Now if you go up north further, it's slated to be residential. If you go down south further, also slated to be residential. So here we have a couple of residential. We don't know that the empty residential plots, whether it will be condo or whatnot in the future. But one thing we know is that we are in the earlier part of the game of the development over here today. This being said, Chencharu always hears things like, oh, ulu, very ulu. But actually, as you know, Singapore is really very small and there's actually no such thing as ulu. Because ulu or not is relative to what? To its surroundings. Are there amenities? If let's say the whole Singapore is a jungle and Orchard Road is not even developed, or it's all jungle or rainforest, then Singapore can be ulu also. But Singapore built, then places that have amenities become not ulu because more people populate there, and the places that are less populated, less amenities are ulu. For example, in the past, Punggol or even Tengah. But you look at today, Tengah, Punggol, do they feel ulu? You can take a drive there, take a train there, and we are all not surprised. In fact, the amenities in places such as Punggol is so well, I would say so well supported today that it even rivals what we used to call mature estates in the past. So with this, right, really back to Chencharu area, when you come in here, when it's fully developed, it's gonna look different and feel different, definitely. The livability wise, it's going to be different. In fact, I think the question we want to ask is not so much of ulu or not ulu, rather, does this have future potential or not? You already know that there are some activities over here that will happen. And so if you're invested in the market today, one thing I want to bring to your attention is the reprice factor. So many a time properties, right, reprice to what? It reprice to utility. And we talk about reprice, right, it's really the changing of the price, update based on the current market conditions of what buyers can accept based on the buyer's sentiments. So let me give an example. Let's say that house A is $3 million and house B is $300,000. But with reasonable conviction, you know that house B will become the price of house A with some renovation and touch-ups. With this, as an investor, which one will you buy? You'll likely buy house B. Why? Because you just need to spend maybe a couple of $100,000 on renovation and then you can already sell at 3 million for profit. Now, this being said, what am I trying to share over here is house A has already its apparent value that you can see. Wow, house A, 3 million. I understand why it costs 3 million. On the other hand, house B, you see maybe it's very dilapidated when you take over. You don't see the value of the 3 million. But with some proper touch-ups, it can become 3 million after the facade has been changed. But people will only be willing to pay for house B at 3 million only after you transform it, not before. So the main thing here at this area is when we buy into this Khatib area, Chencharu Close, we want to buy before the area reprices instead of after the area reprices. And the area usually reprices based on what? Based on utility. When the things are built up and we start to see many of the amenities coming up, that's where the utility value actually grows, actually becomes much more apparent because people can now see it, and that is where more demand will likely flock into the area, helping to put upward pressure on prices. Now next, if we take a look at another interesting factor here is where are the condos in Yishun Khatib area? If you open the map, what happened is we will see and realize that here at Khatib, down south slightly we have Orchid Park and the estuary, right, which is further from the Khatib MRT. Now how does Orchid Park condominium and the estuary perform? Their transaction profits. But more so, I want to bring your attention to further east, and that is where we are going towards with Sky's Miltonia, the Criterion, Signature at Yishun, and the Miltonia residences. Now how are the prices of these few condos stacking up? If we take a look, here are their profits. Despite being so far away from MRT, is there still growth? What more so near the MRT? Now, if we move further up northwest a little, we will be at North Park Residences. Now, North Park Residences is another comparison that we want to make. It being near MRT, here are its profits. Another thing to note is when you look at the Khatib area, you know that you have less supply of condos competing with you when you enter the resale market, at least for now, because definitely the other residential plots here can turn out to be condo also. But let's put a couple of scenarios over here. If they turn out to be condo, Chencharu Close will be the first of the many condos that will TOP and can start to sell in the area, and as a result, having the opportunity to start the next benchmark. If HDB here, you have simply more HDB upgraders. So in both ways, I see a win-win situation. Back to the number of HDBs in this area. As you know, it's a bit cliche, but HDB often provides HDB upgraders. Yes, granted, not all the HDB owners here will eventually move into condo, but a certain percentage. So the more HDB, the better. Over here, we have actually 3 clusters, and even the 4th one on top, Chencharu Vines. So we have 4 clusters over here that can service the exiting resale owners of Chencharu in the future. So if you are one of the owners in Chencharu Close, this is definitely something to note. Chencharu Close itself, by the way, is not a pure residential, it's a commercial residential. So you can call it a mixed development. And as you know, mixed development sold pretty well. Parktown Residence, for example, in Tampines area, sold 87% at launch day. Pinery Residences, as you know, on launch day sold 92.5%. People like mixed development. With this being said, mixed development does have some downsides, and that is mixed developments tend to cost a little bit more in premium. Personally, I don't like mixed development, and when I need to enter my condo, I don't have a proper grand entrance to my condo. I have to go like find the lobby and go up and all that. I don't like that. Personally, I don't like. But if you are a fan of a mixed development, then this project can actually offer you a pretty reasonable entry price. The land size of this plot is around 317,000 square feet. With a plot ratio of 3.2, the GFA adds up to a total of around 1,033,000 square feet. I reasonably expect this project to have over 1,000 units. Land price for Chencharu Close was $980 PSF PPR, with the break-even after you add your marketing, legal, and other miscellaneous costs altogether. Break-even cost is around 1,790 PSF PPR. At 20% profit margin, around $2,148 PSF, and 30% profit margin with around $2,327 PSF. And if you have been following my previous videos, you would know that projects have been sold even up to over 50% in developer profit margin. So let's take a fair range here that developer might start the sale prices from around 10 to 20% profit margin to lure buyers in first before they incrementally increase prices over time as the number of units get taken up. So if Chencharu Close were to start around 10 to 20% profit margin, say around 2,050 PSF, I think that's a pretty attractive bait price to put out at the start. We also want to compare Parktown Residence. On launch day, average price achieved was $2,360 PSF. For Pinery Residence, it averaged around $2,546 PSF. Now, of course, you can say Tampines is a sought-after area, and maybe in the north, you want to factor in a bit of a discount because of the perceived ulunas at the moment. Let's minus a good about $200 PSF. If we minus $200 PSF from Pinery Residences 2,546 PSF, we have around $2,300 PSF. Now, if developer were to launch the project at starting around $2,050 PSF, which is somewhere between 10 to 20% profit margin once again, I think it's a fairly good deal starting off. I think Chencharu Close project is something that whether can buy or cannot buy, we really have to see the entry price. If the developer were to launch it at 30% profit margin, then it is around $2,300 PSF, which I think is still a worth it entry in comparison to the prices that have elapsed for Parktown and Pinery Residences. So this is for Chencharu Close. But then again, remember, we always want to consider what is the walk-away price of any project. And not just the walkaway price, but your walkaway price, because everyone's walkaway price can be different based on your budget, based on what you're looking for, based on how much you want the project. And of course, we have to objectively compare based on other comparative projects as well. This being said, if you want to know how to calculate your walkaway price, I'll put my number here. You can simply reach out to me. I will show you step by step how you can do so. Okay, hope this video has been helpful. Once again, this is Mr. Joshua Tan, and I'll see you around.